Good morning, everybody. Welcome back to another stock market analysis where I will show you how I set up my trades for the day and how I actually take my options trades. So, in our previous video yesterday on the 27th, we said that price on a monthly chart on the higher time frames had broke these highs here. So, we broke this high and we broke this high. Okay. Price traded down and then price had a break in structure. Okay, consolidation, price traded down, another consolidation, and then we can see now price is trading up again, right? And it broke this high. So let's draw a line from the top of there to here, okay, to illustrate that. And then now we see price come down again and potentially forming another low. And so what's going to happen is, as I said yesterday, the stock market is going to make a series of highs and lows like this. And when it breaks a high, there's going to be the opportunity for it to come back down into some sort of range or area. And then it will form a low and continue higher to break this high. And it'll continue the same thing over and over. Okay. Now, that is actually what we see right now in the market. Okay. We have a demand zone that is at the bottom of this red candle here. Right. Okay. We see the break in structure past this high. And now because prices are lower in the higher time frame, it pushes people to buy. And so we see this low started to form in the market. So every morning, what I usually do is I start off by marking the highs and lows of the previous candle on each time frame, on each higher time frame. So right now in the monthly in May, we have this high here, and I denote these by different colors. So we have this high, and then we have this high. All right. Notice we also have this imbalance right here, but the market has pretty much filled that imbalance. So the next things I want to be looking for is where price can head. So an obvious area on the chart is the bottom of that candle. Sorry, is the bottom of this candle. And this is actually going to be a monthly reaction area. So I'm going to denote this as 1 month reaction area. Now, the reason that I'm marking out the higher time frame reaction areas is because price can react quickly from these areas. It doesn't matter if price gets here and has a nice rejection, or it doesn't matter if it just straight goes through it. But we want to be taking our trades up to those high reaction areas and then wait for another opportunity to get in. So the next thing I do is I drop down to a weekly and I mark the previous week's highs and lows. So if I delete this week, you'll see the low of last week was this candle, and then the high of last week was this candle. Okay. And you will notice that we are starting to form um, areas of liquidity. Okay. We'll talk about that later. I'm not going to go too much detail there, but we see price is starting to head towards those higher time frame reaction areas. Then I do the same thing, drop down to a daily just to see where price is on the daily and to see if it can break that or not. Now, the daily is usually as far as I go. At this point, it's usually pretty easy for me to deal with price in the given range that it is, right? It's much easier for me to track where price is going and set up my trades based off of this small range than it is this entire range from the weekly to the monthly. Okay. And so this will help you gain context as to where you are. Now, we have another reaction area here, okay, at the bottom of that candle. But what I'm going to do is I'm actually just going to draw a box from the bottom and the top of that candle, okay, and denote this as some type of reaction area. Now you can drop down to a 4 hour, and then we see price is pretty much looking like it's going to sweep this 4 hour candle. Um, a thing that usually happens in the stock market that we like to see is that it'll form this expansion candle. Now, what this expansion candle is basically it will break this candle, okay? It'll come back up and then it'll actually go higher. Now, this will look like the form of wicks. A good example of an expansion candle would be something like, let's see if we can find a good example, something like here. Okay, how price taps below that and then goes higher just below that. Um, Another good example would be here. Price trades below this candle here, and then it completely blows out this candle and continues to go higher. Okay, so this is a very common pattern that you will see when you are trading. And now, I'm going to talk about what to look for this morning. So all of the price action right here is noise. Whenever you see price kind of choppy like this, usually you want to avoid entering off of that because that's easy targets for price to get taken out. So I'm going to drop down to a 15 to illustrate this point even more. You can see how weak these candles are, right? Compared to, let's say, this candle and this candle. And this just illustrates um that you want to be entering off of stronger candles rather than weaker candles. Okay. So what I'm looking for this morning is that we have a imbalance here. And all I'm doing is drawing imbalances because price can trade into these imbalances, as we said yesterday, and have a reaction. And this is where we anticipate the low and take our trade. We're not necessarily targeting all the way up here. These are simply magnets for our trade. And so even us taking a quick $1 to $2 move out of this zone somewhere, maybe something that looks like this. Oops, sorry. Okay. $1 to $2, and maybe that'll go all the way up there, but that's exactly what I would be looking for every single morning. And so a good entry point for me would be the top of this candle. Okay. That's an easily identifiable reaction area that you can trade from. And it's also combined with this imbalance. And so if price taps below this, as soon as price crosses this green line, I will buy a few contracts of my position. And then as we trade lower and lower, I will enter more and then trade the reversal. So this is what I'd be looking for IWM. Notice price is still rather high. So we still have a little bit of room to go down to get here. But all I'm doing throughout the week, throughout the day, is waiting for it to get here. I'm not going to chase price and chase it there. So another thing you want to do is you want to check for news. This will be kind of the last tip. So if you use TradingView, what you're going to do is you're going to look up the stock SPX 500 USD. You're going to type this out exactly how I have it, and you're going to use the Oanda index. And what this will do is it'll pop these little American flags that you can use to check the news. So if I click here, you see there's FOMC minutes at 1 o'clock. I would write this down before the trading day just so I'm aware when I need to be in and out of trades. And then I would trade based on that. I usually don't touch any of the FOMC. You don't want to touch that stuff. You just want to be aware of it so that you don't trade it. All right, so that's the analysis for this morning. We may trade IWM. There's also NVIDIA earnings coming up tomorrow. So it could be an interesting time. We have chop here, 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 and here. So I'd be interested to see if NVIDIA is going to blast those and if the market is going to start recovering and making all-time highs on other stocks again.